Now let's get on board our guests for today. We have Kunal Bothra as well as Sharmila Joshi joining us this morning. Good morning, Kunal, as well as Sharmila, and thank you for joining us on Buy Now, Sell Now. Kunal, I'll come first to you. The market is looking pretty muted today. We've definitely paired those opening lows, but it looks like we are in the negative territory as of now once again. But what are your high risk and low risk ideas for our viewers today?
Morning, Cheryl. I think it's a market which we've been accustomed to now. Frankly, more of a stock-specific market, and more to do with the index consolidating, going through those intraday, choppy moves. But on the index, or rather on the stock-specific front, there are a lot of stocks which have given some fresh signals of breakout. So in that limelight, I would suggest a couple of buy calls. And one of them is more of a repetition of what I gave in the morning, but then with higher targets, and that's India Cements. I think it's a very strong breakout which you've seen for India Cements on the daily charts. As I was mentioning in the morning as well, that it's a formation of a strong bullish formation on the bullish flag formation on the daily charts. The breakout of this 167, 170 kind of a zone has led to a very strong up move on the stock. More importantly, I think it's the synchronized move which you're seeing across the cement stocks which is coming along in the last 2 days. So even in the markets which have gone a bit more volatile, I believe that cement stocks are seeing a lot of momentum. So which means that there is a demand from buyers in terms of sectors as well. So buy on India Cements. In the morning, I'd given a target of approximately 200. I would revise those targets higher to almost 206. Traders could look at a buy at current levels. Stop loss could be kept at 185. The second stock is a Deccan Lupin. Now, from the pharma pack, I think it's a very interesting chart, and a very classic kind of a bullish flag pattern. But this is not just a short-term bullish flag pattern. This is more of a bullish flag pattern which is spread across the last 6 months, which is why the potency of the breakout could be far more higher and stronger as compared to the other short-term bullish flag pattern breakouts which we typically discuss of. So I believe Lupin could be one of the few stocks from the pharma pack which could move up significantly higher on a positional basis. Targets of 1150 on Lupin is what I'm recommending, and stop loss could be kept at 1030 levels.
All right, thanks so much, Kunal, for sharing those ideas with our viewers. Sharmila, coming to you, good morning to you, and just wondering, we're likely treading water at this point ahead of the earnings that kicks off next week. What are you saying are the top picks for our viewers, the high risk and low risk ideas that you have for us?
Let me go with the low risk first, and I would agree with Kunal. I mean in terms of sector, because he's gone with Lupin, I'm going with Sun Pharma. So I think obviously for me the two sectors that have really been the go-to sectors in this entire year have been IT and Pharma. So I'm going with Sun Pharma today. Here what we're looking at is that not only is overall the fact that Pharma is rallying now after 4 or 5 years is something that should be considered for all pharma stocks, but Sun Pharma in particular has a very good pipeline as far as ANDA molecules etc. is concerned. So they have a very good product approvals. They will be launching their products. And
all right, it seems like we seem to be having a bit of an issue with Sharmila's line there, but Sharmila was talking about Sun Pharma. I believe she also has Titan that she's tracking very closely as a high risk idea. We'll try and get a sense as to why she says that. In the meanwhile, we'll step into a short break. On the other side, we'll take viewer queries, so do stay tuned.
Welcome back. You're watching Buy Now, Sell Now on ET Now. And before we move on to queries, let's get Sharmila's views, or rather her top ideas for today. Sharmila, before the line snap, we are told about Sun Pharma. What is your other pick for the viewers?
That was Titan, and with Titan, I think the March numbers are very good. You have great volumes from Titan in the month of March, and that quarter is going to be a strong quarter for the company. But I think the risk is that now we are, especially in most of the metros, we are looking at a sort of a lockdown situation again. And that could be a near-term dampener. And I think, again, both in the case of Sun Pharma as well as Titan, let's not forget that they are, sort of close to their 52-week highs. So there could be some risk in for Titan because there could be a bit of a sentiment dampener because of this lockdown situation. But I think that the kind of consumption that we've seen for jewelry is something that I expect to continue going ahead. So my high risk idea would be Titan.
All right, that is Sharmila's high risk idea, and that is Titan for you. All right, let's get on board then with our viewer queries for today. And the first viewer query that we've got is from Sunil K. Manohar. He's written to us saying that he's bought Hindustan Copper at 132 rupees per share. He wants to know whether he should hold or sell this particular counter. Kunal, I'll come first to you on Hindustan Copper. If you look at the current price of this particular counter, is much higher than it's higher, not much higher, it's just higher than the buying price, that is 132 rupees per share. What should our viewer do with this particular counter, considering, yes, the surge in the metal counters is actually enticing enticing investors as well?
I think it's a good chart. Frankly, Cheryl, I think the stock has just off late in the last 2-3 months have managed to see some I would say aggressive part of the rally. It's moved up pretty well from levels of 50-55 just about I think a couple of quarters back to now at 130-140 levels where it's currently trading. So the momentum is come back to the stock quite strongly. The only catch is that it's a high beta stock, so it can give wild swings of even 30-40% in just a matter of a couple of weeks. So if the viewer can digest these kind of volatility and still stay put with the stock from a longer term perspective, then I believe he can hold on to the investments over here. I think if the stock plays out on the chart plays out more on the longer term basis, like what we've seen of a rounding pattern breakout, then probably a multi-year target or multi-quarter target of 180 to 200 on Hindustan Copper should be a high probability trade.
All right, let's also get in a fundamental view. Sharmila, coming to you on this one, we're talking about Hindustan Copper here, and if you're talking about the copper prices and the way they've moved in conjunction with base metals globally, then on the face of it, at least, this is an exciting bet to have, right? Because we're looking at the possibility of a metals boom, at least in the near term, and by near term, I mean at least a couple of years. What is the view on Hindustan Copper, though?
I agree, and I was just listening to your metal segment at the start of the show, and that's how really metals have been in terms of prices and in the kind of demand that we are seeing. And copper is no different. We've seen the way copper prices have spiked in these last couple of months. But I would agree with Kunal's caveat on the stock, because there are two things that you must bear in mind when we are talking of Hindustan Copper. One, the earnings have been a little patchy. Of course, I think last quarter they gave a very stellar set of numbers, but the stock has also rallied. So it's in the price. You've seen the stock move from about the 62 levels that it was at to about 140. That doesn't in any way mean that it can't go higher, but you need to keep that in mind, that the stock has already sort of doubled from where it was in a matter of months. So having said that, I think I would recommend a hold, but completely you need to keep the volatility of this space in mind, and then continue to hold Hindustan Copper, given the fact that we are seeing this revival in metals as a space, which is likely to be fairly sticky. I think I would at least give it 6 to 12 months.
Okay, 6 to 12 months, and that's an interesting time period that you've mentioned. Hindustan Copper, remember, Manohar, that you bought very close to the peak as of now. It's rallied about 100% or thereabouts, but like Sharmila said, you bought at the peak, so bear in mind, volatility could be your enemy in this case. Let's get in the next question then. Vivek Pillai has got a question for us for a stock that will likely be in focus next week along with the rest of the IT pack, HCL Tech. But he's asking, should he buy the current market price? Kunal, of course, there's a lot of attention on the IT pack as a whole, and they've outperformed, I think, in the recent past ahead of the earnings. Could they potentially cool off as we've seen in the past once those earnings come in? And what do you want the viewer to bear in mind?
So I think there are two parts to the question. One, to whether to buy the stock at current levels, and the second is whether to actually buy the stock or not. In terms of the IT basket overall. So first, first thing is very important, as you rightly mentioned, Alex, that even on the last quarter, IT stocks went in quite strongly. In the last quarter, they fared pretty well pre-result. Post-result, you saw many of these stocks cooling off, coming out with a correction or with a retracement, which was spanned over the last 2 to 3 months of somewhere closer to 15% to 20% on an average. So let's if the viewer is looking to time the stock, then assumingly if post results the stocks show a similar kind of a phenomena, then you can suggest to the viewer can look at buying the stock on dips. But then I think whether the stock has to be bought or not, I for one believe that the Nifty IT index is not going through a very short term rally. It's going through a very stronger term structural uptrend which could last for many years to come by. So I think as a proportion, I think IT stocks have to be part of your core portfolio, and it could be almost 15% to 20% on an average as compared to your core portfolio. And from them, HCL Tech can be one of the other stocks which you can look at. But the other stocks which I've been very bullish on and very vocal about as well has been Wipro as well. I think looks very attractive. The stock had gone through a mean reversion process again from 470 to 400 levels. Even Infosys on the large caps front looks extremely attractive. So I would suggest that you spread across the your investments on the IT stocks. But yes, in terms of timing, you can probably go with the buy on dips approach, assumingly if these stocks correct post results yet again.
Kunal's view coming on HCL Tech and also the IT sector on a whole. He's saying that he sees a strong long-term structural uptrend for the IT sector, saying that it should be a part of your portfolio. HCL Tech can be one of the stocks that you can hold in your portfolio, but Wipro is looking very attractive, so is Infosys. And also, Kunal is of the view that you can look at buying the IT stocks on dips. Sharmila, what's your take on the IT sector? If you go by what analysts are expecting, they're seeing record Q4 earnings coming in for the IT sector in the last 5 years. So looks like the IT sectors are poised for a good Q4. But how is HCL Tech looking like at current market price? And does it make sense to buy it, considering also you have Q1 also that will be coming in, and considering with these restrictions that are coming in, IT sector is set to benefit from that as well?
I think when we spoke of Sun Pharma, I did mention that my go-to sectors have been IT and Pharma. And really within IT, my favorite stock for this last whole year has been HCL Tech. And I've almost seen it double from the price that I started recommending it at. And I think the reasons are, as you outlined, the current pandemic situation has in fact worked as a benefiting factor for IT as a sector, with this whole shift of greater use of technology and working from home, etc. So we've in fact seen IT budgets do fairly well, and in whichever way you look at it, in whichever parameter you look at it, IT as a sector has done well. Coming to HCL Tech and whether you should buy it at this price, I think that's the key to sort of this query. There I would agree. I think results are next week. It makes a lot of sense to wait. There are a couple of analysts out on the street. I was just reading about the stock, and they do expect Q4 to be a little soft for HCL Tech. So maybe you could see prices correct a little. So wait for that, and I think buy into the stock post numbers, because in any case, even if IT numbers are good, sometimes you see a bit of a sell-off. So wait for that and buy the stock on the dip. But yes, I think HCL Tech would continue to be my sort of top pick within the IT space. And if you're a long-term investor, you can definitely buy it, but try and buy it after.
This is the word coming in from Sharmila on HCL Tech, saying that it's her top pick in the IT space, and also advises that if there is correction in the stock, you can look to buy the stock on dips as well. All right, let's get on board our next viewer query, and this is from Sethu Ramalingam from Chennai. He's saying that he's holding 420 shares of NTPC, which he's bought at 139 rupees per share. He can continue to hold on for 1 to 2 years. He wants to know what's the outlook looking like for NTPC. Kunal, NTPC, definitely that particular counter, if you look at the current market price, has fallen from those buying levels. It's, the stock currently, if you look at it, is at around 103 odd rupees level. What should our viewer do? He can hold on to the stock for 1 to 2 years. So how are the charts looking for NTPC?
I think my view is very straightforward, that I think you should be looking to exit the investment until and unless there is some strategic reason why you've bought NTPC, I don't see any reason why you should be hanging on to this underperformer. It's been a huge underperformer NTPC, not just in the last 3, 4, 5 years, but even in this last 1 year, 13, 14 months of the market recovery which you've seen. So from a low of 75, 78, the stock has had a meager rally towards 100 odd levels, which is just about an average kind of a recovery or a rally for NTPC as compared to many of these other stocks, so many large cap names, so many mid cap stocks which have done phenomenally well. So I don't see any reason why I think you should be sticking around with NTPC for too long. I think you should make a shift towards some other sector and look at more momentum plays, look at more structural plays, and the ones which have done exceedingly well. I think for example, like what we were discussing earlier on the IT space, many of these IT stocks look quite attractive even from current levels. Cement stocks have just about managed to give a recent breakout on the charts. So names like Ambuja Cement, ACC, Ultratech Cement, they look fairly attractive. Even the pharma stocks are looking quite buoyant on the charts, Glenmark, Cipla, Lupin, etc. So I think I would suggest that you have to make a switch, and I think this should be an apt time because of the the sector churn in the markets. And I believe you can probably shift to some slightly high beta sectors as compared to your earlier PSU names, IT, pharma, or from the cement space.
Absolutely, Quran. Because NTPC has been a rank underperformer. Let's face it. Sharmila, coming to you on this one, on the fundamentals, we've got a viewer who is looking to hold for the next 1 to 2 years. And that is enough time to make up the losses that he has currently made in NTPC, which is around 40 rupees per share. And he's got quite a substantial holding of it, 420 shares for a retail investor, of course. What is the advice that you would give? Would you say, even if he is to stay in the power space, would you say that a renewables play is more appropriate for the long term? Or would you say something like an IEX, which has had an eye-opening rally, eye-popping rally? Is that something that you would suggest?
I think that's a very valid point that you're making, that in terms of time horizon, he has enough time to make up his losses. But, I think what we're really trying to say here is that you have a market which is rallying and this stock is not participating. So that's the call that you need to make. If you want to be invested in a stock that could potentially sort of underperform, and you could lose opportunity in being invested in a play like NTPC. So my advice would be really to switch. And yes, I think the options could be many. You could look at another sector altogether because very honestly, power as a sector hasn't really delivered. But yes, I think, as you said, IEX has been an eye-opener kind of a return. But I would really, just shift to slightly more safer sort of sectors where you are expecting earnings to fall in line over the next couple of years. We've spoken of a couple of pharma names. We've spoken of IT names. Those could be the kind of stories that I would look at, given the fact that I want to make up a loss as well as make a good profit going ahead. But the advice remains that you would be, to my mind, missing an opportunity if you stayed invested in NTPC. So switch out of the stock.
So fair points raised by both of you. Remember that NTPC is something that you would want to shift out of, perhaps consider another sector altogether. Let's take another query then, this one coming in from Bhavesh. And Bhavesh is making quite the gains, I would say. He's bought CDSL at levels of 497, and that stock, as you know, has done phenomenally well. I want to come to you first on the charts, Kunal. The question is, should he hold or should he sell at this point? That's what he wants to know. Should he book some profits? How are the charts looking?
Lended for CDSL. It's been one of the very every bull market has a certain set of a theme. Every new bull market comes out with one set of stocks, one set of sectors which tend to be rank outperformers. I think CDSL falls into that kind of a category. So in this bull market, we've seen a completely different wave. I remember clearly that for almost 2 years or 3 years, 2018-19, and I think start of 2020, the stock was just about very sideways. It languished at 300, 200 range for almost the last 2 years or 2 years in that kind of a time frame. But then post-COVID or from post-March 2020, we saw a completely different wave of rally for CDSL from 200, the stock is now at 750, 700, 750, the kind of zone. So it looks very attractive. I think as technical chartists, we look out for momentum, we look out for trends. So all those ingredients of volumes, price appreciation, momentum, trend, they are present on CDSL. So I would suggest a hold, and I would also suggest that probably if you can look at more trailing stop loss mechanism over here. So maybe the previous month low could probably act as a trailing stop loss for you, and then keep on holding this. So till the time the stock trend is this strong momentum, you can continue to make higher gains. And the moment it hits your trailing stop loss, I think that could be a prudent enough zone where you can book out full profits over there. So as of now, I would suggest a hold on CDSL.
Kunal suggests a hold on CDSL. Also, Bhavesh, congratulations. Look at the gains that you've made on CDSL stock. That particular counter has seen a good rally come in the last 52 weeks. Even in the last 1 month chart also, a good gains coming in for CDSL. Sharmila, what's your view on CDSLs? Do you actually echo the similar sentiment that of Kunal?
Because I think there is no taking away from the fact that one of the standout factors of this last year's bull rally has been the kind of retail participation that we've seen. And I think for years, people like me have been saying that equity is the way to go, and that equity participation in the country is very low, and that should be seeing that should pick up going ahead. So you always look at the size of the population and what percentage of that population actually participates in buying equity, whether it is through mutual funds or whether it is directly buying stocks. And that still has a way to go in terms of the Indian context. And what we've really seen is in stocks like CDSL, their active demat accounts have gone up phenomenally. Like, they've really seen a huge jump over this last year, and that is what has led to better numbers from the stock, because that's where they get their fees from. And as I said, this is a situation which I think will continue, because you will now that this the retail participation has started. I think that's a path that's people are going to continue to take, and hopefully equity markets will continue to attract the kind of retail participation that we've seen over this last year. So yes, again, once I think this stock has sort of done very well this last year, and that's something that has to be kept in mind. But having said that, I think yes, you can continue to hold the stock.
Investor, we've got Sagarika from Delhi, who has bought 10 shares of Deccan Cement at 373, making reasonably good gains at this point. Kunal, this is another stock that has done really well for itself, gains of about 20% in the year-to-date period. But if I look at the one-year gains, it has more than doubled. So quite a few of these names. What would you suggest on the cards that Sagarika should perhaps consider doing?
To the investments over here, cement stocks, as I said earlier, is going through again a structural uptrend. We've seen a synchronized breakout. I think it more or less looks like how the metal stocks had broken out a couple of months back, or how the IT stocks had broken out a couple of quarters back. I think it's a similar kind of a breakout, which one can spot on the cement stocks as well. So I think it's also more prudent that if we look at more mid-cap stocks or large-cap stocks on the cement space. But I think specifically for Deccan Cement, because the sector is doing pretty well, the stock charts are also quite stable, I would suggest a hold.
All right, hold is a call coming in from Kunal on Deccan Cement. Sharmila, what's your view on Deccan Cement? If you've seen the cement counters, they've also had a good uptick. Also, you've got various notes also coming in now saying that cement stock are poised for an uptick as well. So what's your view coming in on Deccan Cement?
Yes, I think I would also go with a hold. What we really need to keep in mind for Deccan Cement is that the kind of price moves that we've seen in Andhra Pradesh, because for cement, which region you sort of cater to is also important. So that's a factor in their favor. Again, I think they have an expansion coming up, so they've added capacity that's going to come online. So I think both things kept in mind, as well as the kind of numbers that they have delivered, everything seems to work in favor of Deccan Cements at this point in time. So my advice would be to hold.
All right, all right. Thanks so much for sharing your views on that counter and as well as the sector, Sharmila. And thank you as well, Kunal, for sharing your views and taking the time today. Both of you, pleasure as always having you on the show. We're slipping into a short break as of now, but before we go, have a look at this conversation that we had. Sanjay Gupta, Chief Executive Officer of Star Cements, believes that the performance in Q4 has been good in comparison with the corresponding period last year. He also believes that the overall year of 2021 looks positive because of Q3 and Q4. Listen in.
So the volume in quarter four has been good, I will say, as compared to the corresponding quarter last year. It has really performed well. And I will say that because of quarter three and quarter four, the full year overall 2021 looks really positive. I think in Eastern India, overall East will actually be closing either flat for the full year or marginally about 1% or 2 in the positive side. On an all India basis, I still feel that overall the volume growth will be somewhere either negative about 1 or 2% or flattish. So that has largely been contributed by the volumes which has.
Welcome back. You're watching Buy Now, Sell Now on ET Now. And like we had flagged in the start of the show in the Stock Cloud segment that the diagnostic stocks are on fire today after Prime Minister Narendra Modi in his address yesterday said that we must focus on ramping up testing to weed out the second wave of COVID-19. And staying with this theme, earlier in the week, we caught up with the Managing Director of ThyroCare, that's Dr. A. Velumani, and he said that he believes that COVID-19 will be the single largest contributor to their revenues. Listen in.
I think the entire industry was doing a peak number of tests, RT-PCR, at a very good rate, somewhere around 1,500 in the month of August and September. It looked like it is going to truly contribute substantially to the top line and bottom line of the diagnostic companies. But then came the unilateral price cuttings across different states. And it is sad to note in some states still it is 3,000 rupees and in some states it is only 400 rupees. It is not that locals, खेती में reagent नहीं आते, it's global. But having said that, the price capping has affected the diagnostic industry, number one. Number two, the number of deaths were 1,200 per day. Everybody wanted desperately very fast to get tested. But it had come down to 100 per day in the first week of February. So the tests had come down. What was around, I would call in absolute numbers of, 20 crore per month had come down to 5 or 6 crore per month. But suddenly, the last 8 weeks, it has gone up by 5 times the volume. And with low, still it is making a profit. So I see a diagnostic industry to have, I don't know, for a few months or few years, COVID will remain as a biggest revenue giving test in the laboratory segment.
Now, one leg, of course, is testing. The other leg is vaccination, which the Prime Minister said was a long drawn-out process. But report after report is emerging that there is a shortage of vaccines in key centers, including in Mumbai. So we had a conversation with Dr. Behram Pardiwala, who is head of medicine at Wockhardt Hospital, to understand what the situation on the ground is. Listen in.
Our hospitals are running absolutely full. As of this morning at 8 o'clock, we have a waiting list of 30 patients for ICU and more than 120 for ward beds. I mean, the pressure is tremendous. Patients are moving from hospital to hospital in ambulances. Yesterday morning, I had a call from a patient whose husband was moving around in an ambulance seeking admission. And because his saturation was low and my ICU is full, we just couldn't help the patient. So, and of course, if you're talking about vaccines, absolutely. We vaccinated 200 people yesterday. We have asked for more vaccines, and the municipality has ensured us that, yes, definitely, they would be giving us more vaccine. The government is also working on it, trying to get us more vaccine. And, as far as the Serum Institute, etc., are concerned, and the Hyderabad lab, they're trying to ramp up the production so that we can get more vaccine. So by the end of the week, we'll have a much better and a clearer picture. In the interim period, we have a lot of pressure of people coming in and asking for vaccines. And we are doing our level best in trying to help them out.
All right, moving on. You have the home appliances that they will continue to get costlier as manufacturers are increasing prices for the third time in 2021 across the products. These price hikes are driven by high input costs, although the industry expects the demand to sustain despite the hike, except in the states under lockdown. Priyanka Iyer is here with the details. Priyanka?
Well, yes, a third round of price hikes is going to be undertaken by home appliance manufacturers in the month of April, mainly driven by the high raw material prices. Prices of raw materials like steel, copper have really spiked in the past year, and that is driving home appliance manufacturers to take these multiple rounds of price hikes. What we are picking up from sources is that the price hike quantum will be in the range of 4 to 5% across all home appliances, and this is after 12 to 15% of price hikes that have already been taken in the month of January and in the month of February. So that is the reason, and we are also understanding that not just the high raw material prices, but there's also an availability issue that manufacturers are facing when it comes to raw materials. That is also driving up the prices. Now, when it comes to the demand scenario, the industry does not really expect the demand to be impacted despite the price hikes. And the reason for that is summer is setting in, so that will drive up, the demand for cooling appliances. At the same time, people are going back to work from home. So the entire trend of wanting to upgrade your home appliances will come back. People who have been thinking since a long time to upgrade their appliances are likely to do so. But in the states where there is a lockdown, the business is definitely going to be affected. So states like Maharashtra, which makes up 12 to 15% of the entire domestic business for home appliances, that is going to take a huge hit because showrooms have to be kept shut at least till 30th of April, as we know as of now. There are, of course, positives. The wedding season is also coming, but all that put together, there are pros and cons at this point. Although for the customers, clearly a 4 to 5% price increase coming in from home appliances.
All right, thanks so much for that, Priyanka. Let's go back to our chart buster segment from earlier today then. And we had a conversation between Kunal Bothra as well as Kunal Rambia.
Welcome back. You're watching Buy Now, Sell Now on ET Now. And like we had flagged in the start of the show in the Stock Cloud segment that the diagnostic stocks are on fire today after Prime Minister Narendra Modi in his address yesterday said that we must focus on ramping up testing to weed out the second wave of COVID-19. And staying with this theme, earlier in the week, we caught up with the Managing Director of ThyroCare, that's Dr. A. Velumani, and he said that he believes that COVID-19 will be the single largest contributor to their revenues. Listen in.
I think the entire industry was doing a peak number of tests, RT-PCR, at a very good rate, somewhere around 1,500 in the month of August and September. It looked like it is going to truly contribute substantially to the top line and bottom line of the diagnostic companies. But then came the unilateral price cuttings across different states. And it is sad to note in some states still it is 3,000 rupees and in some states it is only 400 rupees. It is not that locals, खेती में reagent नहीं आते, it's global. But having said that, the price capping has affected the diagnostic industry, number one. Number two, the number of deaths were 1,200 per day. Everybody wanted desperately very fast to get tested, but it had come down to 100 per day in the first week of February. So the tests had come down, what was around, I would call in absolute numbers of, 20 crore per month had come down to 5 or 6 crore per month. But suddenly, the last 8 weeks, it has gone up by 5 times the volume. And with low, still it is making profit. So I see a diagnostic industry to have, I don't know, for a few months or few years, COVID will remain as a biggest revenue giving test in the laboratory segment.
Now, one leg, of course, is testing. The other leg is vaccination, which the Prime Minister said was a long drawn-out process. But report after report is emerging that there is a shortage of vaccines in key centers, including in Mumbai. So we had a conversation with Dr. Behram Pardiwala, who is head of medicine at Wockhardt Hospital, to understand what the situation on the ground is. Listen in.
Our hospitals are running absolutely full. As of this morning at 8 o'clock, we have a waiting list of 30 patients for ICU and more than 120 for ward beds. I mean, the pressure is tremendous. Patients are moving from hospital to hospital in ambulances. Yesterday morning, I had a call from a patient whose husband was moving around in an ambulance seeking admission. And because his saturation was low and my ICU is full, we just couldn't help the patient. So, and of course, if you're talking about vaccines, absolutely. We vaccinated 200 people yesterday. We have asked for more vaccines, and the municipality has ensured that yes, definitely, they would be giving us more vaccine. The government is also working on it, trying to get us more vaccine. And, as far as the Serum Institute, etc., are concerned, and the Hyderabad lab, they're trying to ramp up the production so that we can get more vaccine. So by the end of the week, we'll have a much better and a clearer picture. In the interim period, we have a lot of pressure of people coming in and asking for vaccines. And we are doing our level best in trying to help them out.
All right, moving on, you have the home appliances that they will continue to get costlier as manufacturers are increasing prices for the third time in 2021 across the products. These price hikes are driven by high input costs, although the industry expects the demand to sustain despite the hike, except in the states under lockdown. Priyanka Iyer is here with the details. Priyanka?
Well, yes, a third round of price hikes is going to be undertaken by home appliance manufacturers in the month of April, mainly driven by the high raw material prices. Prices of raw materials like steel, copper have really spiked in the past year, and that is driving home appliance manufacturers to take these multiple rounds of price hikes. What we are picking up from sources is that the price hike quantum will be in the range of 4 to 5% across all home appliances, and this is after 12 to 15% of price hikes that have already been taken in the month of January and in the month of February. So that is the reason, and we are also understanding that not just the high raw material prices, but there's also an availability issue that manufacturers are facing when it comes to raw materials. That is also driving up the prices. Now, when it comes to the demand scenario, the industry does not really expect the demand to be impacted despite the price hikes. And the reason for that is summer is setting in, so that will drive up, the demand for cooling appliances. At the same time, people are going back to work from home. So the entire trend of wanting to upgrade your home appliances will come back. People who have been thinking since a long time to upgrade their appliances are likely to do so. But in the states where there is a lockdown, the business is definitely going to be affected. So states like Maharashtra, which makes up 12 to 15% of the entire domestic business for home appliances, that is going to take a huge hit because showrooms have to be kept shut at least till 30th of April, as we know as of now. There are, of course, positives. The wedding season is also coming. But all that put together, there are pros and cons at this point. Although for the customers, clearly a 4 to 5% price increase coming in from home appliances.
All right, thanks so much for that, Priyanka. Let's go back to our chart buster segment from earlier today then. And we had a conversation between Kunal Bothra as well as Kunal Rambia. And they were speaking about a few stocks that are buzzing in trade as of now. Listen in.
If I look at the Sun Pharma formation right from April and May 2020 till now, there's been a clear positive trend on the counter. Recently, we saw some kind of sideways momentum that's since Feb to March, and now the counter is again coming out of this consolidation, and you can see clearly the counter is taken the support of the trend line itself, and right now above the Ichimoku cloud, which is showing a decisive move to begin again. So out of the entire cluster, I think Sun Pharma can outperform at this level. So keeping the stop loss of around 600 levels in mind, one can think of accumulating this counter between 624 to 615. And on the higher side, we can expect the counter to reach the 700 zone.
I think it's interesting because the yellow metal, it shined extremely well in the second half of 2020, managed to rise up from, in rupee terms, from levels of 37, 38,000 to as much as 57,000 odd. What I've mapped up is the rupee-based chart on, gold. And you can look at it the last, 5 months, 6 months, I think from the September highs of this 55, 56,000 for gold, it's corrected and gone through a downward sloping channel. Now, where gold tested last week, or I think the week prior to that, at 43,000 levels on rupee terms, it managed to hit some three important confluence of supports. One of them is that falling trendline channel, which you can see, which coincides or ends exactly at that 43,500 mark. The second is the 61.8% retracement. It's a Fibonacci-based retracement, which is also a very, very interesting aspect to look at. And the third and the most important point is the rising support channel, with a rising support trend line, which you can see from the December 2019 lows. So I think the confluence of all these three key supports has been found at the 43,500 mark for gold, and now you're seeing a credible bounce coming across on this asset class, which means that not just for this asset class, but the beleaguered stocks like Muthoot Finance, Manappuram, MCX, which have been reeling under selling pressure since last 2-3 months, even these stocks can see a very strong sign of relief. So gold as a short-term charts or on the medium-term charts is showing signs of bottoming out and probably getting ready, for a rally on the upside. And what this could do is give an impetus to the other, gold-related stocks, as I just discussed earlier.
Moving on, are you worried about your payment bank security system as the RBI has further opened financial system doors for them? Remember that just this week, Central Bank has doubled the digital wallet deposit limits to 2 lakh rupees and extended RTGS NEFT services for non-bank players like Paytm, Amazon Pay, on those lines. You have Manoj Chopra, who is the VP and Head of Products and Innovation of Intrasoft Tech, gave assurance to the users that RBI has already issued directives to the fintech to tighten their security systems and bring them at par with top recognized lenders. Listen in to what he has to say.
There has been NEFT and RTGS, which has also been allowed. Cash withdrawals have also been allowed. Earlier, cash withdrawals were not allowed for non-bank PPIs. When I say non-bank PPIs, these are the likes of Freecharge and Oxygen and Ola Money, which are not banks. These are just purely prepaid instrument providers. Now, what happens is, as I said, in order to make a wallet as good as a bank account, some of these things are required. Now, if you look at, if I summarize all of these directives, now you've got wallets which are now acceptable at multiple merchant establishments. You've got interoperability. You've got wallets which will then enable you to roll out cards. So you can have cards which can be issued to you, which will be connected to one of the card networks like Visa, MasterCard, RuPay. You then have a facility of cash withdrawal, and you have NEFT and RTGS. So, for example, I would want to pay my college fees, and I would need an NEFT and RTGS for that. I would be able to do that with my wallet account now. So, net, all that put together, wallet becomes equal to a bank account. If you look at the RBI directives or the RBI master directives that have been issued, there is a very detailed framework or there are very detailed, elaborate guidelines for risk monitoring and for fraud prevention. And these includes the things like velocity checks. These includes things like two-factor authentication, where you will be able to use OTPs or grids like you use with bank accounts. You'll be able to have cap on transactions that you can do in a
markets more or less on the same note as they were when we started the program, and we'll hand it over now to the afternoon show. So do stay tuned. This is ET Now.